Good morning, everybody. Welcome to the Game Plan. My name is Gareth, Soloway, Chief Market Strategist here at VerifiedInvesting.com, and we have a ton to talk about. Yesterday's elections, we're done with that. Now we're on to the Federal Reserve. There's never a dull moment here, and that's where the charts come into play, right? So if you think about it, it's who's going to win this? Who's going to do this? What's the Fed going to do? Look to the charts. They aren't always going to be right, but in general, they'll give you the probabilities that put you in the favor of being a profitable investor or trader. So let's not delay anymore. Let's get right into it. Walk over here with me. We're going to take a look at the S&P pre-market here. And what we're seeing very clearly is a little bit of upside. So it's not like yesterday. Yesterday was a massive rally. Dow Jones Industrial Average up over 1,500 points, 3.6%, I think. Today, much more muted, but that's expected because we're waiting for the Fed at 2 p.m. and then the press conference afterwards. Now listen, the Fed, the odds are, and this is really close to 100%, they will cut 25 basis points. The question is, what are they going to say in the press conference? What's Jerome Powell going to say? Is he going to guide towards another cut in December? Or is he going to say, hey, we got to wait and see. Are there going to be tax cuts? Are there going to be tariffs? Are those going to be inflationary? And we have to be a little bit more careful. I doubt he goes out on a limb and starts saying anything like that, but it's going to be very key to the market to watch and see the reaction. All right, so yesterday, monster rally to the upside here. You can see overnight we trended a little bit higher, and then this is pre-market from basically 4 in the morning, 4 a.m. Eastern time till now. And you can see it's basically stayed within a very tight sideways to slightly up motion. Now, again, remember, folks, that I've talked about how ultimately, as long as this line holds right here, as long as this one holds, the odds are still further upside. It's an uptrend. That is the trend. If this breaks and confirms, all right, game over in the markets, right? But ultimately, you can see yesterday's massive move. We're coming up to revisit this upsloping channel. This is going to be resistance. It's right around 595 on the SPY or 5,995 on the spiders, right? So essentially, we're getting very, very close to that level. On the charts, and that's going to be resistance. And remember, I've done calculations, technical calculations, trend lines. A lot of trend lines are meeting right up in this 6,000 zone to 6,100. All right, now again, I wish I could narrow it down to an exact penny or dollar amount, but really this is the level that I'm now focused in on. So again, that's just basically a pierce of this upper zone where we tag 6,000 on the S&P, and then I do wonder if that puts in a longer term major top. I've even said this to you guys before. I'll say it again. I'm looking to take a very large put position. Granted, I give myself a lot of time, but I'll take puts probably 18 months out or so. I'm looking for a bigger rollover on the S&P itself. That, again, will be how I look to play it. And I'll let you know if I end up taking those, if we get up there, I end up taking that position. Of course, I'll let you guys know in the game plan. All right, so that's where we sit right now, folks, as we come back here. Now, we got to look at the U.S. dollar and the 10-year yield. We'll start out with the dollar. Remember, the dollar rallied up into this level right here. You can see, again, you take the highs going back to 2023 through the high of April 2024 and the high of July, and look at what we slammed into, and look at the sell-off in the dollar today. So the dollar is coming in. The 10-year yield is not doing a whole lot here. It is pulling back a little bit. Notice it pierced my super major resistance zone yesterday. But remember, guys, a pierce doesn't matter. Always keep in mind, this is so important. Levels will pierce. They will close above. They will close below. There are games being played in the markets, right? There are computer programs. They know what buttons to push, essentially, to make you think it's a breakout or a breakdown, and then they'll reverse it. I've seen it way too many times for it to just be a random occurrence. So always remember, wait for confirmation, the confirmation signal. If you don't know it, hopefully eventually you take the Winning Trader series and you will learn it, and it will change your life. All right, so going back here, guys, notice again we closed above this zone. Many people probably thinking, oh boy, it's a breakout. Not so fast. Let's see what happens today with the Fed, but right now rates are coming back in. Now, we're going to get into earnings today because the earnings, there are a ton of them. So first stock we're going to look at is Qualcomm. Qualcomm reporting earnings, initially surging on earnings and then backing off. This stock, honestly, only up about 3, 4, 5%. It doesn't even get on my radar to trade. I need a stock that's making a bigger move. Now, you can see I had all these former levels here. Overall, the one thing I will say, and I'm going to get rid of some of these lines so I can really keep it simple for you guys, all right, there is, simply put, a bear flag formation on this. Now, this doesn't speak to what's going to happen today, right? But you have to monitor that this is your upside resistance, right around 184 to 185. Well, if we look at Qualcomm pre-market, it's at 182.72. Notice it's staying right underneath that level. So this, again, this would be in technical analysis still part of the bear flag. This would be your flagpole. I'll even draw on a little pole for you guys. There's an upside down flagpole that is bearish. As long as you don't get really above 185 and confirm, this chart to me eventually is telling us, based on probability, that eventually Qualcomm rolls over. All right, next chart to look at, let's take a look at ARM Holdings here. ARM is dropping on earnings, although it has rallied back a little bit. But yesterday we closed up here at 145. It's now trading at around 140. But look at the chart here. Look at this, guys. Look at the bear flag. Very similar to what Qualcomm's chart looked like, except this is a little steeper of a flag pattern, which, by the way, isn't quite as good. You want a more of a 90-degree flag pattern. That's the better flag pattern. Doesn't mean these won't work out, as we can clearly see. But going into earnings, look, you closed below, you didn't confirm, you confirmed, and then today, what's happening? You're selling off on earnings a little bit on ARM Holdings. The probabilities were guiding us that this would come down on earnings. And that's so cool to be able to do that, right? I mean, if we think about it and we just want to understand, it's not about being right 100% of the time. I certainly am not. I'm far from that. But can I bat 75, 80%? Yeah. And that's enough to put you in a major kind of escalation on your financial future. And I love that. And that's just an explanation, whatever, point on, on the backdrop there with that going across. But you guys get my point, is it's all about odds, and then the rest takes care of itself as long as you don't let emotion take over. And listen, emotion, do I get emotional? Heck yeah, I do. But, you know, from when I started trading to where I am now, just ask my wife, I'm a lot less emotional, and sometimes that pisses her off. But again, it's just you start to get in this mind of like logic and probability, and this is what it is. And even when I have a losing trade, I get over it unbelievably fast, right? It's just like, it's done. Forget about it. On to the next one. Because you know what? I've traded probably hundreds of thousands of times in my career. You can't hang on a loss. Let it go, on to the next one, because you're playing a game, right? It's a game of odds. And so if you have 10 trades, you know you're going to lose 1 or 2. So just once it's done, okay, on to the next winner now. You know you'll win another 8, and then you lose 2, and then you win another 8, et cetera, on and on. All right. Let's go on here, guys. Back to the charts here. So ARM holding the bear flag. We'll see what happens. Lyft today, a monster move to the upside. As we see, it is coming in a little bit, but this is a big move on Lyft, trading at around $17.50. Going into earnings, it certainly wasn't at all-time highs. It was hovering down here. If we look at where this could run into resistance, I'm looking for a level right now. There's a little bit of a pivot right up here at 1840. So right here, there'll be some resistance. But to be honest, I don't like that level, and I'll tell you why. Number one, it's only a little pivot top. It's not like a multi-factor level or a major top. And if we also look at this, by the way, look at this. This is yesterday's aftermarket. Where did that high stop? On a dime. Right there at that exact line. But again, also one of the things to remember is when you hit a trend line, generally what happens is that trend line is weakened. So if it goes back up there, I'm not going to short there. Instead, I'll look for the secondary one up here, 1956, and then the big one will be your double top at 2085. So these two would be my day tradable ones today. It may not get up there, but this one here I will probably avoid. Yes, it will be a little resistance, no doubt about it, but I will avoid that. The other thing you could possibly do as well is go to your bigger time frame, but this is way far up, but there's a gap fill here at 3075. It's not getting there today, folks, unless something crazy happens, but nonetheless, that would be a major resistance level. All right. Let's talk about Wolf, guys. All right, so there was a comment yesterday on the video, of yesterday's video, and they're like, oh man, can you talk about Wolf? I'm getting slammed on Wolf. I'm losing so much on Wolf. And I'm just like, my brain just starts to hurt because sometimes when I see these things, I just want to almost punch myself in the face. And the kicker is this, is like, I gave this out at around $8 a share. Okay, if we go to the chart here, we can see. All right, $8 a share, right down here. This is the breakout of the wedge pattern. It was right here, $8. The stock goes to $17, over 100% gain. And then on earnings, it pulls back. And on earnings, the stock is dropping pretty sharply back to about $10. And in my head, I'm just like, and again, I don't mean to, I'm not going to mention any names, but just going over here to the thing, I need to make a point here, is that there's a reason why a lot of retail investors lose money. Because they're not acting rationally and smart, right? In a way, they're being dumb. And when you are up 100% on a trade, or even 50%, you take it off the table. Like, what are you waiting for? Do you want the Lord Jesus Christ to come out of the sky and just be like, dude, sell your stock, take some profit? It's like, seriously, what are you waiting to see? All right? But when you get 100% gain, you can't come back and be like, oh, I'm losing so much. No. Think about this. I'm going to go to the gold chart in a little bit. Gold pulled back. I told you in the game plans that I was short gold. All right, I literally took half of my profits off the table yesterday for about over a 5% gain. Because you know what? What I've learned is that when you're in the money, and you're in the money decently, and you're hitting a support, and gold hit a support yesterday, and by the way, it's getting a small bounce today, and we have the Fed today, you can't sit there and be like, no, I really want gold to drop like 80% before I take profits. Like, use your brain. Use your brain. All right, so you have to keep this in mind, is you have to think logically. What I like to do is when I'm in the money on a bigger position, and my gold trade was about 16% of my commodity portfolio on the short side, I took half off, and then I'll let the second half run. But what it does is it guarantees me a profit, especially if I keep a break-even stop in. So when you're up, like for me, generally, my swing trades on stocks, if I get between 10 and 20%, I'm taking it. I mean, now, could it go 100%? Sure. But you know how many times I've taken 10 or 20% on trade, and then I buy it back even lower again, like a month later? It happens all the time. Essentially, the point is, don't be greedy. If you're trying to make 1,000x on a stock, it's not going to happen. Even on a crypto, that's generally not going to happen. You got to use your smarts here, folks. All right, so again, I can give out things, but you have to also manage it smart. You don't think Warren Buffett's sitting there saying, you know what, I'm dumping my Apple now for a 20% gain. Dang, I was really looking for a 5,000% gain. No, he's taking some off the table. He did that with Bank of America. He's moving in and out. He's a trader. He's an investor. He's using his smarts to pocket some profits, put it in that pocket, like literally put that money in that pocket so that you can have the freedom to still hold some, and if that keeps going, then take a little bit more off, but eventually you have to say, where is enough? And when you don't say enough, what you're doing is you're letting the market decide, and the market is brutal. Remember that. The market is out, it's shark-infested waters, and it will brutalize you. So if you don't take your profits, the market will take it away for you. Trust me on that. That happened to me a million times over. All right. Enough of my sermon here. Let's get back to some of these charts. All right, another big mover today, SolarEdge here. Now, SolarEdge is an interesting one. Look at this, all the way back to 13, folks. Now, this is one I was in with my swing trade members here, folks, and we were in this one. I picked it up yesterday, after hours, right? So yesterday it was down 22% on the day. If we go back to the daily, you can see it right here. It was down. But I like charts like this. This is a very Wolf-esque chart as it's coming back in. Now, yesterday after hours, they reported earnings, and it wasn't a good earnings report. The stock was down like another 20%. But it had just fallen 22% during the day. For me, I'm like, we got to add to this position. We got our average down to like $13 and, $13.25, whatever it is. And lo and behold, you're already seeing this move up. I like these type of things because essentially when you think about it is if a stock drops 22% because there's a new president, is that a reason? Like, is that specific to the company? The answer is no. But by dropping 22%, it essentially factors in bad earnings already. And so then when the earnings come out and the initial reaction is dump the stock, oh my God, look at these earnings, then wait a minute, you're telling me it's down 40% now just in 24 hours? No. And so these stocks will rally back up. And especially when you have these wedge patterns at the lows of charts, they're golden setups. golden setup. So in any case, SolarEdge is down. It's already rallied off the lows. There's nothing to do here. If it dumps back out to the 11s, I think it's a buy, but I wouldn't tell anyone to be paying up to 13 now after it was trading at 11 and change just earlier this morning. Next chart, let's go with APPL. Now this is one that, to be honest, kind of blows my mind. This is one very Carvana-esque. And when I say Carvana, let's take a look at the CVNA chart, and I'll show you why. So Carvana had this crazy, so it was already vertical. Like this run up on Carvana was insane. I even talked about it here, how I thought it was going to go down on earnings. I was wrong. It rallied up on earnings. But I felt good, and I added to my short up there because it was so extended, and it's like a used car vending machine. It's not like they're curing cancer here. They're not doing anything crazy here. So the idea was, okay, well, it's up because of a short squeeze. It'll come back in. That's exactly what it did on the chart, right? The next day it came right in. The next day, then it popped on the market yesterday. But even yesterday, the markets were up epic amounts, and this was only up $3. This is going to come in on Carvana. But the point being is with APPL, which, by the way, I've actually learned a lot about APPL today. But really, when you're looking at this stock right now is trading around $230. Just from the August lows, this stock is up, all right, let's go here to 230. It is up 265% in 3 months. 3 months. This was August 5th was the low. Today's November 7th. 3 months and 2 days. We'll give it the 2 days. My point is, a stock going up 265% in 3 months, that tells me the rubber band is ready to snap back. And so I think this one is, at these levels at 230, insanely good opportunity to short. When I say it could be like a Carvana, meaning it's up on earnings, but it's very extended, it might see, maybe it holds its gains today, we'll see, but I think it comes back in the coming days. All right. Lastly, really quickly, guys, one of my favorites here. Wow, look at WBD here. Holy cow, just hit 940, guys. This was one of my favorite charts. I gave this to members as a trade. I want to go over here real quick and show you this. So I look for these. Remember when I told you guys that the Russell 2000 was going to be the next runner and to look for small and mid-cap stocks? This was one I gave to members. Trading at levels not seen since 2009, the Great Recession, on Warner Brothers Discovery, right? But look at the chart pattern, all right? There's two amazing bullish patterns here. You have this one right here, the inverse head and shoulders, right? All right, there's one. That's an inverse head and shoulders. Beautiful bullish chart setup. And then to add to that, you have the W V pattern, which is an explosive pattern. Remember MAs, these are bearish patterns. They drop down. So you have the M top with the A, boom. The WV pattern, okay, let's get rid of that other part there. Bear with me. There we go. The WV is the inverse of that, and this is an explosive pattern. And so again, look at that setup, folks. If you're a member of Smart Money Stocks and ETFs, that was right there for the taking. And today it's rallying on earnings. I bought this I think we bought it, was it yesterday or the day before? Whatever it was, we picked this up at around right down here. And now it's again trading at like 940. We're up, what, 15% on this or so? That's just my rough math. It's probably a little different. But again, these are the types of things when you know charts, you can find these setups. It's so profitable. And this is why, right now, the Winning Trader series is out there and people can take it. But what I say to you is that when you learn this stuff, it changes your life. It really does. It changes your financial future. Like, let's say someone's financial future was like let's just draw it on here like this, right? Maybe a little upside. They work all their lives. All right, maybe they retire. They have a reasonably okay retirement, hopefully. When you can learn how to read charts, the power you gain is like this. So this is early in their life. Now they learn the Winning Trader series. It starts to diverge, and it just gets like that. And that's what's so cool about it. So anyways, another time, it's coming up on Christmas. Think about investing in yourself and making a lot of money for yourself over the course of your life. And what I always tell people is that what you learn today in terms of chart analysis, it only compounds. Like, think about an interest-bearing account, right? You're investing in yourself now, but think about as you make money, making more money on that money as it grows and grows and grows. It's pretty remarkable stuff. Okay. On to a couple other things here, guys. Just a reminder here, if we go to the website, I know, listen, some of the services here, like my stocks, and this is $150 a month, this is $75, this is $100, this is $100, and the earnings trader, I think, is $150 a month. So I understand for a lot of you guys, this is out of reach, and I understand that. And yes, you would have made X amount of money just on WBD in this service right here, but I understand it's not for everyone. You know what is for everyone? Advanced Trader Insights. $20 a month for all these reports. And by the way, this trade rewind, we just got rid of it, and we just introduced an options report in its place, as well as insider buying and selling, as well as a cycles report, as well. I mean, literally so many quality things. And we're doing this on purpose to make it a low-hanging fruit for people to be able to afford, and with so much quality in it, because I want you guys to be able to listen. We got to cover our bills here. We got to do that. But at $20 a month, there's almost no one in this world that can't afford that. And it is so much a wealth of knowledge there that you can at least put yourself on that financial trajectory by doing the Advanced Trader Insights. All right, so just going back to it, you guys can see $20 a month. That's it, and all of these, and we'll update all of the different reports that are in it in the coming days, but it is remarkable how much amazing stuff is in, including my top 3 trades for the week. There's a trade of the day, my daily market report, all these fun things. All right. Let's get into Bitcoin, guys. Let's talk some Bitcoin analysis. So just for full and fair disclosure, I love telling you guys when I make trades in Bitcoin. I did short Bitcoin yesterday with members of Smart Money Crypto. We shorted it at 76,100. Right now, we're in the money by about, I don't know, 1,300 bucks. That's not bad. I mean, a little bit of a gain there. But the idea is I had a level right up here. You guys know I was waiting for this to pierce. Now, I want to be clear for all of you crazies out there that are just like gung-ho on crypto, it doesn't mean that I don't like Bitcoin. I love Bitcoin, but I'm a trader. So when it shows me an extended move, and by the way, the reason here, let me see if I can remember this level here. I think it was connecting this through this, like right here. There's a level right there, something like that. Yeah, you guys can see it right there. If there's a short-term trade to make money on the short side, I'm going to take it, and I'll flip it around and go long. I still think long-term Bitcoin goes up, but I'm not going to be like, oh, well, since I believe in Bitcoin long-term, I'm not going to make this easy money on a pullback when the chart's telling me it's going to pull back, right? So I think that's really important. Either way, how far do I think it's going to pull back? Not that far. I mean, right here, you got to respect this level right here, maybe about 70,000, 69.5, somewhere in that vicinity. All right, we got to hurry it up because I got my trading room waiting for me here in a second. But let's quickly go over gold. You guys know I kind of talked about gold before. Gold is bouncing today. Notice the midpoint of the channel. This tells you your channel is dead on when the midpoint actually aligns with pivot points right here, right here, right here, right here. This is why I took half off of my short yesterday on gold because we tagged the midpoint. All right, now I have the second half, which has an entry somewhere up in this range. If it gets back there, do I want to re-add to the short or do I want to just exit for a break even on the second half, which ensures a profitable trade? I don't know yet, but I'll make that decision based on what the chart is telling me, not based on my emotion, not based on my feelings or, oh, I really hope. There's no room for hope in this game, folks. It's charts and probabilities. That's what it is. Always remember that. All right, silver, taking a look. Yesterday, silver broke down, but it's getting a little bounce today. My zone is right down in this 29 level. Oil almost doing nothing again. Really, oil's gotten very, very quiet, down just a little bit on the day. Remember, 65. If we break 65, watch out below. As long as it stays above there, it could rally back into the mid-70s. Wouldn't shock me. And then lastly, natural gas here, guys. Nat gas, nothing going on here either. So on that note, I know I had a lot of rants and raves today, but sometimes you just got to let it out. It's been a busy week. It's been a busy month. But all of this, guys, my goal is to help you. I want you guys to be able to learn, even if you just watch these game plans and trading to closes, there's enough alpha in these to do really, really well and start improving yourself financially. Thank you so much for your support here at Verified Investing. We all here appreciate each and every one of you for tuning in every single day, for your kind words, your kind comments. Thank you so much. I will see you later for Trading the Close. Take care.